a uranium exploration company. We've just made the latest high-grade discovery in the Athabasca Basin of Canada. Of course, the Athabasca Basin is the home of the highest-grade uranium deposits in the world. But before we get into that, just a little bit about the macro picture and why you should be looking at investing in uranium now, why you're in the right room of the conference. So, of course, prices have started to move up, and all of those downstream products, you go from yellow cake down to uranium fuel rods, the prices of those downstream products have finally started to move up significantly. And you can see those charts there, prices of SWU price, conversion prices rising, and those are the canary in the coal mine for the uranium business. The uranium price will soon follow those prices. So now's the right time to be in this room. And the reason that's happening is because the supply side has been so challenged for so long. So we've seen about 40% of the world's production taken out of the market. Now, this is a market that's about 180 million pounds per year, and we're only producing about 100 million pounds per year. So we're in fundamental undersupply as we speak. So prices must rise. Now, to get set in our sector is very, very simple, and this is how you make money in the uranium business. I'm going to put a share price chart up here. Now, IsoEnergy is a spin-out of NextGen Energy. NextGen was a tremendous success, of course. We started that business, Lee Courier, our chairman, myself and Chris McFadden back in 2011. We raised some money at 5 cents a share. We made a discovery in 2013 of the Arrow deposit. And in the worst market anyone's ever seen, the share price went nuts. So despite difficult market conditions, you can still do very well in the uranium business. We've delivered at NextGen our share price, our shareholders over 40 times their original investment, and we're looking to do the same at IsoEnergy. Now, looking at that's the alpha potential, if you like. If you want to look at the beta potential of our sector, the combined market cap of our sector, our uranium exploration, development and mining sector back in 2010, 2011 was about $150 billion. Today, it's a tiny $15 billion, probably a bit less today, about $13 billion. So the beta potential alone, just getting set in the sector, is tremendous. There's nothing else in this convention hall like it. And then to get set in the sector, very, very straightforward. 2010, over 500 listed uranium companies around the world. Today, a piddly 50 companies, probably 35 of those are actively exploring or developing or operating. So very simple to get set. You can buy a basket of those stocks and put together a portfolio of those stocks. That Uranium Boom, Rick Rule, of course, talks about that very fondly because he made hundreds of millions of dollars. But in 2007, that Uranium Boom, we saw returns that were absolutely extraordinary. You can see there 660% in the beast of the sector, Cameco. And of course, the great one was 18,000% from Paladin. So 200 times your money invested. So that's the potential from a uranium boom. So if you look around, you can build a portfolio of those sorts of companies, or you can take a look at a company that's made a high-grade discovery, the only company that's made a high-grade discovery in the last few years, and that's IsoEnergy. So a little bit about what we're doing at IsoEnergy. I'd encourage you to come and visit our booth for a bit more detail. We're over in the far corner, 337, I think, Wesley. We've got the team there, Steve Blower, Keith Bodnarchuk and Wesley Sharp. They'd love to talk to you about this, but absolutely spectacular mineralisation. You can see there that black mineralisation is high-grade pitch blende mineralisation. You can see some of the results there. Now, my eyes are getting a bit dodgy, but 7 metres at 5.4% U3O8. Now, to give you a little bit of context, I'm guessing because you're in this room, you know some of this stuff already. Most of those people out there won't realise that 1% uranium is about 20 grams per tonne gold equivalent. So that 5% there is about 100 grams per tonne gold equivalent. So that's 7 metres at 100 grams per tonne gold. There aren't many issuers out there in that auditorium that have those sorts of results. So they're truly spectacular results. We've been delivering those results consistently for the past couple of seasons, and you'll see we're about to launch our drill campaign in the next couple of days, and you'll see more of those results from us. Eastern Athabasca, we're in the home of the highest grade uranium deposits in the world. That's the home of Cameco. All of Canada's uranium is produced from that little area. You can see those orange blobs there. They're our properties. That zone is about 100 kilometres to the north and about 40 kilometres wide, and is home to some of the densest concentrations of monetary value on the planet. Cigar Lake, the world's biggest uranium mine now. McArthur River was the biggest uranium mine in the world until Cameco closed that 2 years ago. Have tremendously high value dirt, and all of the infrastructure, everything you need to mine uranium is in place. And it's in the wonderful province of Saskatchewan. And Saskatchewan consistently ranks number 1 or 2 in the Fraser Institute survey of mining executives for the best mining jurisdiction on the planet. So it's a fantastic place to be based. That map there, a little bit hard to see, but what we've defined there is a 500 metre long zone of high-grade mineralisation. And Steve's got the drill rigs kicking off in the next couple of days, and we'll be drilling in and around those fantastic results we've got. So whilst you can never guarantee good results when you're exploring, this is as close to being able to guarantee it as you can, because we'll be drilling next to some spectacular drill holes. And this is an example of that, a couple of cross-sections from the deposit. It's an unconformity associated deposit, typical of those big eastern Athabasca deposits. You can see we haven't closed off any of our sections, and we haven't closed off the deposit along strike. But these 2 sections here we'll need to drill, and you can see the southernmost hole on this section to the left, we drilled 7.5 or 8.5 metres at 3.2% U3O8. If you remember the gold equivalent calculation, you know that's a very spectacular result. Well, we haven't closed off that, so one of the holes we'll be putting in is right next door to that hole. So we'll, I think we're confident of putting out some very positive news over the next couple of months. And then outside of that, we've got another rig starting. It'll be our most aggressive campaign. We'll have 2 rigs going this time round, and our Hurricane deposit down on the western edge of that big pink anomaly sweeping through there, right on the property edge, on the property boundary. You can see the anomaly out to the east. Now, we put one hole back in last winter on the edge of that anomaly. Last summer, I should say, on the edge of that big pink anomaly, and it hit some really interesting alteration and very interesting geochemistry. So part of our program with our second drill rig will be out testing the extent of that anomaly, and that's one of the, you know, in my experience, I've had 20 years in the mining and exploration business. That's one of the best targets I've ever seen in the business. I love that target, so I'll be very excited to test that. You can see a little bit more on the drill program. It'll be our biggest program so far. We raised $7 million back in December, heavily supported from our biggest shareholder at NextGen. Travis McPherson's up the back there, head of corporate development for NextGen. Another great guy who knows the sector so well, great supporter of ours at ISO. And Travis was important in the money we raised there. So have a chat to him about this as well. But we've got $7 million in the bank. We've got $2.2 million earmarked for this drill program. We'll be drilling 8,500 metres over about 20 or 21 holes. And so you'll see very strong news flow. I think if you compare us to the big guys outside of NextGen and Cameco, you know, we'll be the highest the highest production rate of news of anyone else in the uranium sector. So look out for that. A little bit about the corporate structure, all important, of course, in my last minute here. Our share price performance has been okay. We're one of the few companies, few uranium companies that are in positive territory for the past 52 weeks because of that discovery success that we've had there. We have a very tight share structure. We've only got 84 million shares on issue. Market capitalisation today of about 35 million, 7 million in the bank, and all important, our shareholders. Our shareholder base reads like a who's who of the uranium space. Of course, NextGen's there with 52%, an incredibly supportive major shareholder. We've got Cameco there with 4%, Arana or Areva with 2%, and they're supportive shareholders as well. And then we have a very strong institutional shareholder support base. So the free float is only about 20% of the market. So that means whenever we put out good news or uranium prices rise like they're about to, you know, our share price performs better than just about anyone else in the space. So that's it. That's IsoEnergy. You know, as I say, the only recent high-grade discovery in the space. Uranium prices are about to take off, so look out for that. And discoveries still matter. So, you know, look to us for more of that. And I'll leave you with this one last thought. This is a comparison of the IsoEnergy share price chart to the NextGen Energy share price chart over a similar timeline. And of course, as I say, NextGen has delivered shareholders over 50 times their money and counting. We're at the earliest of stages of that process, of that value delivery to shareholders. So look out for our drill results over the next couple of months. And thank you very much.